Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it now, as the virus turns. Yes, of course, every day is dominated by the virus, the coronavirus, COVID-19, whatever you like to call it, social distancing, economic turmoil, a lot of job loss, a lot of economic issues for people. So not a good scene right now. But we're trying to muddle through it, and let's hopefully something good will come through it at the end. We'll figure this out along the way, I suppose, like everybody else will. Not the first time we're challenged with something, it won't be the last time. So just sort of keep your spirits and hopes up, and we'll see what happens in housing as the time goes on. So today is March the 28th. It is a Saturday, and yes, I'm doing a weekend video here. Reason being because I got a lot going on during the week, and didn't have enough time the past couple of days to actually prepare for a video and look at some of the news reports that are going on. So clearly everything that we are talking about is revolving around the industry and how it's going to affect people, and we've got some things to talk about. I think they're quite important. If you're not already a subscriber, please help my channel grow. Do me a favor, hit the subscribe button on the video. I would certainly appreciate that. Thank you. So the number one news item that I'd like to talk about today, and there's a whole bunch here. So yes, this will be a longer video just because the volume of stuff is out there, and somebody said if my videos are too long, play them at 1.5 speed and you'll get through them faster. So that's a good suggestion. So please do that if you think they're too long. All right, this is the headline that caught my attention the other day, or today really is the coronavirus about to wipe out FHA lending? And investor anxiety has already washed away non-QM lending. So QM stands for qualified mortgage. All right, so basically that's the term for a qualified mortgage. You're falling within the box, full documentation, W-2 employee, things like that. So, that's qualified mortgage sort of lending standards, etc. Well, basically, borrowers who don't fit into that box by Fannie Mae or Freddie Mac could be running out of options. And that's what really I think is the number one issue here. So over the last week, many, if not all, of the biggest lenders specializing in lending to the non-traditional, non-QM environment pause their activities due to uncertainty in the market. So this is basically, you've got a deal, you may be a stated income person or a no documentation person for various reasons. There's no suggestion here that you're trying to circumvent the system or pull one over on somebody. Just that's the nature of your self-employed or however you earn your income. It's not traditional. You work for a company and they send you a W-2 at the end of the year. All right. So basically, a lot of the non-QM lenders just stopped issuing loans. The directive was stop. Like, don't issue anymore. Don't take any more applications. Hold on now till we figure this out. And so that was a shocker to some people. And that's going to cause, again, as I call it, the domino effect. So certain people who were already in play going to purchase a property, suddenly their lending has been shut down. Now, it's been paused. We don't know whether this is going to be a shutdown for a few weeks just to see how this all plays out, etc., or whether these lenders are really shutting their doors and having bigger issues as time goes on. So that will manifest itself after the next little while here. Now, that's not to say the government itself is making any changes or limiting borrowers' ability to get an FHA loan, but the FHA loan requirements are still the same: minimum credit score of 580 and a minimum down payment of 3.5%. But the current economic environment is forcing lenders to make changes on the fly right now, and they're likely to make FHA lending unavailable for a number of borrowers that could have qualified a few weeks ago. So maybe you were at a certain level of credit, and guess what? Because of all the concern in the industry right now they've raised the bar on some of the qualifications, and now you're finding yourself not available to either get the FHA back loan, or you were in process to buy a house and now it's going to cancel. And I can tell you, as a side note, as a licensed real estate broker in Florida, when you go and you create contracts, etc., you go into sometimes state realtor associations have websites where you can pick off and utilize state approved contracts and addenda. And I've already seen a coronavirus addenda stating just that if you go into a agreement, to purchase a property, now there's this new addendum that basically says, and I don't know the whole scope of it, but the point being that they're now putting the coronavirus in as a sort of I wouldn't call it an out clause, but just something to say, hey, this could cause lack of financing or delays, et cetera, et cetera, et cetera. So both the buyer and seller need to understand this and figure it out on the fly. So that's something new that's hit the market here. Many lenders have raised their minimum FICO scores for FHA loans to as high as 660, which would prevent a large section of borrowers from accessing an FHA loan. So that's going to cause some chaos for some people who are already in progress with respect to having loans out there for properties they like to buy. Now, of course, all the lenders are going to be ultra conservative now. So kind of like when the last housing crisis, this is the parallel. The last housing crisis happened and occurred. What happened? The lenders became ultra conservative and loans were being given out. You could have a high credit score and you could be a perfect candidate, but because everybody had their I guess eyebrows raised and backs up and everything, that they were looking for reasons not to actually issue loans because people didn't want to be involved. Oh, that's the next loan that I underwrote that now is going into foreclosure. So the sensitivity is very high. Case in point, there are millions of people who just lost their jobs as the coronavirus shuts down the country, and many more people are expected to hit unemployment in the coming weeks. Many of those people don't have massive amounts of money in savings, and that's going to be an issue for them, everyone they owe money to. This will likely lead to massive mortgage delinquencies. So I'm not saying it. Now we see other people out in the world saying that we're going to have massive mortgage delinquencies, and that's going to cause a problem for people. Just realize that some discussion here. I'll let you know how big this could be. The mortgage industry has laid out a problem in a letter sent to decision makers this week to give one a sense of scale. If the nation receives forbearance for only 3 months, actually, hang on a sec here. If just 25% of the nation who are borrowers receives forbearance for only 3 months, servicers will have to cover payments of roughly $36 billion. If they received it for 9 months, that cost would exceed $100 billion. So here's the problem, and I will talk about forbearance in much more detail in my next video. And the reason being, I've talked to a lot of people the past couple of days, it's a very confusing topic because what's happening now is when we're in a state of panic and we're going on what's happening here, what do governments and big corporations do and people who control the world, the financial environment, whatever, they're looking to quell the fears and they're looking to give us hope. Well, sometimes that hope that's what it is, just words. And in the end, some of the things they're saying, how it's going to play out may not be as people perceive it or as it's being portrayed to us right now. So, and case in point, I'm not here to try to cause undue anxiety. People will know what I'm talking about when I say this, or cause mass hysteria, panic. I'm trying to be realistic and provide a sense of realism as to what's actually going on in the marketplace and what to expect down the road if you undertake some of these opportunities from your lender. Again, I'll talk more about it next video, but case in point, ask the questions, understand what you're getting yourself into, because it may not be what it's portrayed to be or how you understand it right now. But again, the whole point being, if a lot of people jump on this forbearance opportunity, this, we'll call it benefit, it's going to cause a massive liquidity issue with respect to the servicers and the lenders. So that's not going to be a good thing. But so right now, this is clickbait. So I'll tell you this right now, and I've used it in my title of my video. Obviously, I'm going to do that. So is the coronavirus about to wipe out FHA lending? Well, it's certainly going to change the marketplace for a lot of different people who otherwise only can use FHA lending for low credit scores and low down payments. So this is going to change the landscape quite a bit in what's going on right now. Now, speaking of lending, this doesn't affect us here in the U.S., but here's an example. Britain's housing market freezes as wave of delayed mortgage payments loom. This is going to cause problems for other countries across the board. It's not just us in the U.S. England, Canada, Australia, other locations that have housing bubbles will get the effect of this now too. And what's the unique part about this, that's what I want to talk about, is a number of banks and specialist lenders have already withdrawn new mortgages to focus on existing customers' issues, even as demand for loans is expected to soar. The decision was meant to reduce stress on all call centers, and most places are expected to be low on staff in the next coming weeks. Lloyds and Barclays have already withdrawn most of their mortgage offers and are expected to cut off all loans currently in the process of being made. So there again, if you're in process for a home, don't be expected that, hey, we're going to just not fund you anymore. So now that's a domino effect for the buyer and for the seller who is looking to sell their home. They're going to cut off the loans unless the borrower can put down 40%. So what happens in a time of sort of real estate bubble chaos and lending issues is the exact opposite. From 3.5%, now this is again, UK, United Kingdom versus the US here, but i.e., you're putting, I'm sure they've got low down payment loans there too. Now they're going from low down payment loans to 40% down. So they're going to do risk mitigation. I'm not going to lend unless I know you can pay for it, and you got to put, skin in the game, and that's 40% is quite a lot of skin in the game 3.5% is not. You see, and as we know, what's going to happen here, we're going to start to see massive delinquencies, and that's going to cause prices to decline. So if you put 3.5% down with a high low FICO score and a high debt to income ratio, and we see some declines, you're immediately underwater, and you are risk now because of the economic and job crisis across the board. So we're going to see probably some short-term changes. That's always what happens. And as I said that, this parlays nicely into the next article here. Record 3.3 million Americans just filed for unemployment benefits. So one of my previous videos was that Goldman Sachs was predicting like about 2.25, 2.6 million people. Well, the stats actually came in at 3.3 million. And this basically is, I mean, obviously the service industry is hit hard through this. Biggest jump in claims from the prior week were Pennsylvania, Ohio, New Jersey. And that's a lot of, 3.283 million people saw initial jobless claims last week, almost double the expectation of 1.7 increase. Now, this is over a 1 week period. So that's going to cause a big time situation. And again, like when you take a look at how the virus is affecting people with all the shutdowns, etc. Well, let's just take it off the top. Travel industry, right? People are taking pictures when they're on airplanes. You know, there's like 10 people on a plane. They're all spaced out, okay, doing social distancing. So the airlines, all the people that work at the airports, servicing, the planes, the people who take your tickets, people that clean the airports, people that are actually, going to the airplane and putting the food services in and stuff like that. All the people who screen, the TSA, this is all a domino effect that's going to kill us. Hotels. So if you're traveling, you got to stay in a hotel. Well, that's going to wipe out now, which then goes to taxis and Uber drivers. They're going to feel the pain of that as well too. All the food services prep, all the restaurants and bars and things like that supports what we do. I mean, a lot of people are in takeout mode now, and you can't go inside to eat, and we just know that they're laying off staff, and not we're not all of us are doing takeout essentially, right? Because now you could be losing your job, and you're going to do the best you can to manage your funds and not go to restaurants and take expensive takeout. Tourism, we know tourism is getting decimated big time with the theme parks, the destination locations, stuff like that, vacation places. Cruise lines are getting hit big time. Basically retailers, we know that retailers and malls and stuff like that are hitting it hard too. So it just seems to be a lot going on with respect to the industry. It's just going to permeate its way through right now. So lots of layoffs, a lot of things are going to happen. Of course, University of Michigan every so often does their consumer sentiment, and the consumer basically saying consumer sentiment crashes most since October 2008. So basically we're kind of back in mindset where we were at the last housing crisis and what we call as the Great Recession. Please realize that's according to University of Michigan. It plummeted, and we're back to where we were as far as our the ratings decreased the most since 2008. So back in the last housing crisis and recession. There you go. Why? Excuse me. Why does that happen? 47,000 stores shutter across the U.S. as virtually all retailers stop paying rent. So you basically we've gone through 2 years of, we'll call it record bankruptcy filings by a lot of retailers and corporations across the country. We know malls are getting hit, and you can't even go shopping now. The malls are closed down. So it seems to be getting worse and worse and worse. The domino effect, everything's shutting their doors. I did see an article, I didn't print it out, but basically the Cheesecake Factory, the restaurant, the Cheesecake Factory, lots of big locations across major cities and other locations. They basically just sent off a letter, a corporate letter, instead of having them to be chased, they went right out to their landlords and said, we're not paying April 1st. Simple as that. We've had cut back, obviously, we're closed, we've had to cut back on our staffing, all the losses are anticipated, and they basically came out and said, we're not paying rent, deal with it. And I think that's what we're going to see, is that a lot of industries and a lot of businesses are going to be restructuring their lease agreements with their lenders, their landlords, whatever, to see what can happen to push some of this off. Because ultimately, in the end, as I said, all these industries that are getting hurt, it's a domino effect. So there you go. Mortgage applications crashed most since 2009. So we were on mortgage highs with respect to lower rates and refinancing the whole bit. Well, guess what? Now, the past couple of weeks, all the shutdowns and the closures, and people now, 3 million plus people losing their jobs, etc. This will be a domino effect for renters, landlords, homeowners, the whole bit's just going to get worse and worse. Well, mortgage apps crashed the most since 2009. So now what was, a good number of purchase mortgages and of course a large number of refinance applications, guess what? Back down to the big, since 2009 when people started pulling out. So that's how that's kind of working. Home purchase applications dropped 14.6%, while refinancing applications plummeted 33.8%. So basically big numbers in mortgage applications, just the volume dropping down here. Interesting, because one of the things I've talked about before, when we talk about the tourism and travel industry, you've got Airbnb. So Airbnb exists out there. Airbnb really is, I think it's a sleeper where people can really get hurt. There are people who've just purchased properties, whether it be condos, houses, whatever, unique type properties across the country, different locations, with the sole purpose of running an Airbnb operation through that or through those properties. So that's going to be affected. And I could just whether you're renting a room out in your house or whether your house is part-time, whatever, people were counting on that income to make ends meet and pay their mortgage and stuff like that. I even know that the past year some refinance lenders, people who, if you wanted to refinance, they were actually using, if you had a year plus track record of Airbnb income, they were using that as, you could use as income to support your documentation when we do your refi. So people are going to get hurt. But the nice thing about Airbnb, it says Airbnb to offer free or subsidized housing for 100,000 COVID-19 first responders. So basically, that's great. So obviously they're going to work through that. We are partnering with our host to provide healthcare providers, relief workers, first responders on the front lines of the COVID-19 pandemic with places that are safe, clean, and allow them to be close to their patients. So clearly that segment of the world is probably overworked and working long hours. If a lot of them are commuting in from I guess you could say, in larger cities, I'm thinking like a New York City. If you take the subway or the train into a downtown hospital, if subways and trains are being shut down or limited schedule, how are you going to get to work to serve all these patients who are in those locations that need help? So at least this is a good positive thing, which I think is wonderful. However, I do think it's strategically well played on their part too, because number one, it's allowing, it's saying for free or for reduced. So it's allowing some hosts to still earn income, and that all that's doing is also keeping goodwill with hosts and people, because Airbnb was hoping to go public this year in 2020, so we know that's going to get pushed off. But still, smart on their part to make that available to people in certain locations. Gotta like that. All right, mortgage rates fall sharply as the Federal Reserve brings stability into the mortgage market. So we had low rates, and then we had an uptick. So we had low rates. They hit the lowest in how many years? So we had like our record lows of about a month ago, maybe 6 weeks ago. And then because of the refinance boom and because of the activity, lenders actually got overwhelmed with respect to all these applications and servicing them and getting loans, put through the system. They actually raised their rates as a deterrent to tell people stop. Okay, if the rates go up a little bit, obviously rates go up, applications slow down. Rates drop, applications speed up. So it's directly proportional as to what's going on here. So but the rates fell again. So we'll see what happens. But couple that with, okay, we can drop rates to stimulate the economy, etc., and that will affect housing and mortgage rates. But now if you can't go see open houses or go view properties, now we've got people who can't, who are going to be stuck with respect to foreclosures and evictions. I mean, this is really going to be a tough time for people to buy homes, just because the accessibility of going to check out a house is going to be difficult. We're probably going to see a lot more. We are now a lot more virtual staging, virtual pictures, virtual discussions, more online stuff with respect to hunting for real estate, etc. So mortgage rates declined precipitously this past week after the Federal Reserve began buying mortgage-backed securities in an effort to provide more assurance to home lenders. So the Fed, the government, is buying these mortgage-backed securities, saying, hey, don't shut your doors, keep confidence, let's keep the machine moving, because we know real estate's a big contributor to the gross domestic product, the GDP, and all the ancillary things that run off real estate, right? Whether it's title services, real estate agents, home inspectors, appraisers, closing with title and escrow, as I mentioned. You go to the property, what do? You buy stuff. You go to IKEA, you go to Target, you go to furniture shops, I mean, there's all, when people help you, movers, like all these things, utility startups, whatever. So there's so many things that are affected with when housing slows down. So this is a good idea to get things moving. We'll just see how this plays out as well. And finally, article here that says mortgage closings at risk as coronavirus shutters title and recording offices. So now a lot of we'll call it title and recording offices have moved to have a lot of things online. So a lot of the people that manage these operations, will facilitate closings. But realize that state, county, and local governments have shut down or are limiting number of people who may enter their offices, including property recording centers. So when you get a deed, somebody has to go record that, or when you get a mortgage, somebody has to go record that with the clerk. Now, a lot of the stuff is online. So currently, nearly 2,100 counties provide some electronic access to their property records, but about a third of the jurisdictions still don't have the ability to accept digital documents. So that's going to cause a little bit of chaos with respect to closing and recording. Just keep that in mind out there. But what a lot of them are saying is that we will advance some of our technology, and there's something called the Commerce Using Remote and Electronic Notarization Act. So when you do a mortgage or transfer a deed, you actually have to sit in front of a notary public, whatever, and present your documentation, like your identification, who you are. They look at you, you sign and print, they notarize and stamp, they get a witness to witness it, maybe two witnesses. So that's all kind of in person, making sure that we're all legitimate, right? Well, obviously now things are going more electronic over the past little while. Things are going digital. So I think this will just advance a lot of that, because if I can get financing, if I can acquire the home and secure the home, leave me the keys, I can sign stuff electronically. If we can get it digitally notarized, then stuff can still happen. Money can change hands, transactions can still occur, people can still buy and sell homes. So just something to think about. So what this is doing is, I think that this virus will change the landscape a bit. It just shows us how maybe fragile we are and how we operate, and it's probably going to usher in a lot more technology, digital ways of doing things, so that we can do stuff remotely or not have to engage physical contact, keep the social distancing, whatever. So that's just kind of interesting. But again, think about this: if you refinance your home, you don't need to you're not purchasing a house. You're just refinancing your mortgage. So, you don't have to go, in theory, you don't have to go to the title company to sign deeds, because you're not signing a deed, right? It's just a new rate and term. Maybe you get some money back, but then they can wire it to your bank or mail you the check, in the mail. So simple as that. So a lot of the stuff that's going on now can convert to a digital or remote access type of environment. So that's interesting. So just keep that in mind. But again, this is changing the way we do things. It's typically an event like this, or a situation we're going through, that causes us to relook at our operations, our processes, our systems, etc., and maybe find new ways to work around we have to work around, but then that becomes the norm as time goes on. So that's it for today, guys. I just wanted to do a little bit of an update as to some of the general news topics here. As I said, the number one article that I was looking at the other day and today was the fact that, will we see some changes in FHA buying criteria or borrowing criteria? We probably will. Keep your eyes on that. The secondary component is keep your eye on, I call the non-banks, the non-QM, the non-qualified mortgage lending institutions that are responsible for a lot of these FHA-backed loans originations, seeing where they end up, seeing how this affects them, seeing how liquidity or the lack of liquidity affects their operations, and they may have some difficulty. Again, my next video, I will discuss more in detail all the discussion on forbearance and mortgages and foreclosures and things like that. So I'll make that a very detailed explanation, because I know a lot of people have questions. And as I said, there's a lot of, I won't say misinformation, there's not enough information out there where people can actually understand what's going on. Because listen, if you're not in the industry and you hear these words, you think, oh great, I don't have to pay my mortgage and everything is great. Well, there's qualifications and criteria that you're going to have to jump through at the very end that may or may not break what you're doing. Okay, so just please be aware of that. And again, we'll go into it in more detail. Having said that, I'll write my self-promotion here, which I'm allowed to do because it's my channel. All right. So a lot of of opportunity now in buying, purchasing investment properties. I live in the Tampa, Florida area, in Central Florida. If you're interested in buying properties primarily for rental and hold, what we're going to see is we're going to see rental, like cash flow properties, don't get hurt too much this time because people always need to rent. As a matter of fact, we'll have more renters out there now, so rents could possibly increase. And now I'm seeing a lot of opportunity to purchase cash flow rentals. So please, I've got a number of sources, a lot of good sources, so please contact me if there's an interest in that. Also, with respect to what's going to happen in the future, I'll say this right now, we will start to see a lot more foreclosures that will be coming. I'll talk about that, like I said, next video. So you might want to prepare yourself for that and how you can capitalize either on a primary residence, second home, vacation home, or investment property. That's through the short sale process. I do have specific advanced training for that. Please send me an email, include your phone number in there so I can text you, and we can discuss the opportunities that will present itself the next little while in that untouched large opportunity of inventory market right there. All right, guys, thank you very much. Have a good couple days. We look forward to speaking with you in the next week.